Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're taking a look at Gaxos.ai.
If you find our talks useful, please consider subscribe, like, and comment underneath. It really helps us out. So looking at the ticker GXAI, I have to be honest, it feels like every company I see now has .ai, just, stuck on the end of its name.
It's a crowded field.
It feels a little like the .com bubble all over again. So what makes this one different? Why are we even talking about it today?
That's fair. And, usually I would agree with you. Most of it is just noise. But Gaxo stands out because we're catching them at a very specific moment, a real inflection point.
Okay.
If you looked at this company, say, a year ago, you would have seen a completely different business.
Different how? Like a new logo or a whole new reason to exist?
The latter.
Yeah.
A massive identity shift. They are moving from what was essentially a pre-revenue speculative gaming idea into a multi-segment business that's actually finally generating cash.
Generating cash. Okay, that's the magic phrase. That's when you go from being a science project to a real business.
Exactly. And the big catalyst, the reason it's on our radar right now, is the commercial launch of Gaxos Health. This isn't just another roadmap, it's a live product. And that marks the shift from them being a story stock, where you're basically just buying a dream, to a company with, tangible revenue.
So they've gone from we've got an idea to here's the bill.
That is the hope. But to really get the risk here, and it is risky, you have to look at where they came from. They IPO'd back in February of 2023.
Right.
Then, almost a year later, January 2024, they did a major rebrand. They moved away from a heavy focus on NFT gaming to become Gaxos.ai.
Okay, hold on. That sets off my skepticism alarm. A company that was all in on NFTs when that was hot and then pivots to AI right when that gets hot.
I know.
Are they agile or are they just chasing whatever keyword is trending?
That is the cynical take. And honestly, it's a completely fair question. When a company pivots that hard, you have to wonder. But now, in 2026, we're actually seeing the results of that pivot. It's not just a label. They've built out an ecosystem with 3 distinct pillars.
3 pillars. For a company this small, usually you pick one lane and you just try to survive in it. What does multi-segment even look like for them?
It's surprising. They've really structured it to have 3 legs to stand on. First, and this is the most critical one right now, is Gaxos Health.
Okay.
Second is Gaxos Labs, which is their content creation arm. And third, going back to their roots a bit, is Gaxos Gaming Labs.
Let's start with the new one, Gaxos Health.
Yeah.
You said it's the main revenue driver. What is it? Just another calorie counter app? Because my phone is full of those.
No, it's much more aggressive than that. It's their big push into the longevity economy. We're talking personalized health based on biomarker testing.
Biomarkers. Okay, so for those of us who aren't biology majors, what does that mean? Actual medical data.
Right. It's not just counting your steps. The platform uses testing for things like your blood markers, hormone levels, metabolic health. It takes that hard data, runs it through their AI, and then spits out these super personalized nutrition plans, fitness routines, that kind of thing, even live coaching.
That sounds like a heavy lift. That's not just a software company anymore. That's almost a medical logistics company.
It's a massive undertaking, but that's also why it's the core of the thesis. It creates a much stickier relationship with the user.
How so?
Well, think about it. If I'm using a free app to count calories, I can delete it tomorrow and switch to another one with 0 pain.
Right, there's no loyalty.
But if an app has my blood work history, if it knows my hormone levels, and has designed a vitamin plan based on my actual deficiencies, I am not leaving. The switching costs are just incredibly high.
It's a data trap. A good one. For them, it basically turns a user into a dependent.
Precisely. Now contrast that with the second pillar, Gaxos Labs. This is their creative engine. They have tools like UNGPT, which is a text humanizer, and ArtTGE for visual generation.
Wait, a text humanizer, does that do exactly what it sounds like?
It does. It takes AI-generated text and makes it sound less robotic, less generic.
I see the use case, but I have to play devil's advocate again. You have OpenAI, you have Google, Midjourney. These are titans with billions in R&D. Why is a tiny company trying to compete there? It feels like swimming with sharks.
It is dangerous water, for sure, but they aren't trying to build a better general AI. They're not trying to, beat GPT-5 at writing poetry. They're looking for vertical integration. And that connects to the third pillar, Gaxos Gaming Labs.
Okay, back to the gaming roots.
Yes, but with a twist. They aren't just making their own games anymore. They're building an AI platform to help other publishers develop and monetize their games.
Ah, the old sell the shovels during the gold rush play.
It's a cliche for a reason, but yeah. The whole strategy is risk diversification. If the gaming sector is slow one quarter, maybe the subscription revenue from Gaxos Health keeps the cash flow steady. It's a hedge against the volatility that usually kills small tech companies.
Smart in theory. But this brings me to the one detail I saw that made me actually stop and reread the page. You're describing a company with a health division, a creative division, a gaming infrastructure division. That sounds like it needs a campus.
Hundreds of people.
And this is where the story gets really, really weird.
What's the head count?
This is the stat that stops everyone in their tracks. Gaxos operates with, give or take, 3 full-time employees.
3? Did you mean 300?
No, 3. As in 1, 2, 3.
That's not a company. That's a group project. That's a carpool. How on earth is that even possible? How are 3 people running a biomarker logistics platform and a gaming studio? It kind of challenges everything we think about corporate structure, doesn't it? This is the skeleton crew model taken to its absolute extreme. To get it, you have to think of them less like a manufacturer and more like a general contractor.
Like someone building a house.
Exactly. The general contractor doesn't pour the cement or wire the electricity. They coordinate. They hire the best plumber, the best electrician.
So Gaxos is just the architect and the project manager.
Right. They're likely using heavy automation for internal stuff, but for everything else, they're leveraging partnerships and outsourcing. They don't own the blood testing lab, they partner with one. They aren't coding every single pixel, they're providing the AI tools to people who do.
So the AI is the glue that lets 3 people manage the work of 50.
That's the theory. And for an investor, it's incredibly polarizing. You could look at it and say, they're so understaffed, if one person gets sick, the whole company stops. And that's a real risk.
The hit by a bus factor is huge.
Massive. But if you take the bullish view, this is the ultimate in capital efficiency. Just think about the margins.
Well, yeah. No bloated HR department. No middle management.
No giant office lease. If they can get real revenue from Gaxos Health, every new dollar drops almost straight to the bottom line. The margins could be astronomical.
It's pure leverage. But it's so dependent on those partners, right? If the lab messes up a blood test, the customer blames Gaxos.
That is the operational risk. You trade control for efficiency. But the fact that they even launched Gaxos Health, which is complicated, suggests they have the management skill to pull it off. You can't do that with zero cash or zero organization.
Okay, so this 3-person team is trying to build a moat. You mentioned the sticky health data. Is that enough to keep giants like Google away?
It's a strong start. But the real moat isn't just AI, it's the vertical integration. The giants are building general AI. They want to be everything to everyone. Gaxos is trying to be very, very specific. They're connecting health and gaming.
Gamifying fitness isn't new, though. My watch tells me to close my rings every day.
True, but this is about the depth of that integration. By combining their gaming background with that hard biomarker data, they can create feedback loops that a generic chatbot just can't replicate.
Give me an example.
Okay, imagine a game where your character only levels up when your real physical vitamin D levels improve, or your in-game stamina is literally tied to your sleep data from the night before.
That is interesting. You're blurring the line between the biological user and the digital avatar.
Exactly. That intersection is their niche. They understand engagement loops better than a healthcare company, and they understand health data better than a gaming company.
So they're competing on application, not on raw power.
Correct. But, and we have to talk risks, because they are significant, that doesn't mean they're safe.
All right, let's hit the bear case. What's the biggest risk here?
The headline is execution risk. We talked about the pivots. An institutional investor looks at the jump from NFTs to AI to health and says, this is a company just throwing spaghetti at the wall to see what sticks.
They haven't proven they can stick with one thing long enough to really master it.
They haven't proven product market fit in any of these categories yet. And we don't have the numbers on Gaxos Health. What's their customer acquisition cost?
Yeah.
If they spend $500 in ads to get one user who only pays $50, the math just doesn't work.
And with only 3 people, who's even running the ads? Who's watching that budget?
Bandwidth is a massive risk. And then there's the second big one, competitive intensity.
Yeah.
The creative tools, like the text humanizer, that feels more like a feature than a product.
Yeah.
Google could add a humanize button to Google Docs tomorrow for free, and that whole revenue stream for Gaxos just evaporates.
You're just renting space on a technological shift that someone else owns.
Exactly. And finally, there's just the microcap reality. There is zero institutional coverage, no Goldman Sachs reports, no consensus price targets,
So retail investors are flying blind.
which means extreme volatility. It's the Wild West.
It really is. Okay, so for an investor with a stomach for the Wild West, what are we watching for? We're in early February 2026. What's the next big event?
The big one is immediate. Q4 2025 earnings. We should see those late this month or early March.
Why is this one report so critical?
Because it's the first full quarter that will show revenue from Gaxos Health. It's the put up or shut up moment. We need to see user growth, retention rates, and their forward guidance.
So if they come out and say, we signed up 10,000 health users, the stock moves.
It completely validates the thesis. But if they say adoption was slow, the whole story takes a huge hit.
Any other catalysts to watch?
Yeah, the gaming lab side. They've been hinting at major partnerships in Q1. If they announce a deal with a big, recognizable game publisher, that validates their tech. It proves the shovels actually work.
Okay.
And look, it's speculative, but with a structure this lean, M&A is always a possibility. A big healthcare or gaming company might just decide it's cheaper to buy this 3-person team than to build it themselves.
But you never buy a stock hoping for a buyout. That's just gambling.
I agree completely. It's a cherry on top, not the whole sundae.
So let's wrap this. You've looked at everything, the model, the risks, the team. What's the final verdict? Where does Gaxos.ai land on the scorecard?
The analysis gives it a bullish score of 7.0 out of 10.
A solid 7. Not a screaming buy, but definitely positive.
It's a cautiously optimistic 7. The upside is huge because of the low valuation and the operating leverage. If that skeleton crew model actually works, the profitability could be historic.
So how do you approach it? Is this a quick trade or a long-term hold?
You can see it two ways. First is the swing trade, playing the run-up into these Q4 earnings. You're betting on a re-rating once the market sees actual health revenue.
By the anticipation.
Right. The second way is a long-term, multi-year hold. That's a bet that this tiny team can scale this thing to a $50 million plus revenue business. If they do that, the stock is a huge winner from here.
But you need the stomach for that volatility.
You absolutely do. This is high risk, high reward. It's an opportunity that most of Wall Street just isn't looking at yet.
Which is where you find the gems and also where you find the rocks.
That's the trade-off.
So to sum it up, Gaxos.ai, ticker GXAI, a microcap transforming from crypto gaming to a diversified AI company. They're anchored by a new health platform run by an impossibly small team and sitting right in front of a make-or-break earnings report.
That's the story in a nutshell.
Here's my final thought then, for you and everyone listening. We always talk about AI changing industries, but Gaxos is testing something way more radical. Can a 3-person team actually disrupt 2 massive industries, healthcare and gaming at the same time? Or is this the ultimate test of doing more with less, finally hitting its breaking point?
It really redefined what a corporation even needs to be in the age of AI. If they pull it off, it's not just a good stock, it's a blueprint for the future of business itself.
A blueprint or a cautionary tale? We'll be watching those earnings very closely. Thanks for breaking this all down.
My pleasure.
And thank you for listening to Smart Wealth with Joshua. We'll catch you in the next one.